Welcome back. All right, today's topic is the 1% rule is dead. What does that mean? Well, as a real estate investor, you're going to find out. All right, so let me share my screen. Here it is. The 1% rule is dead. How smart investors are winning in today's market. Okay, what is the 1% rule? Look, if you've been a real estate investor for the past 10, 15 years, you know what I'm talking about. The old investor rule of thumb is your monthly rent equals your 1% of the purchase price. This means if you're going to buy $80,000 investment property, multiply by 1% equals $800 monthly gross rent before deductions. This metrics alone will give you a very good cash flow. This is the benchmark of historical real estate investing for many, many years. But in many cases, you can even get a higher than 1% rule, which is in this case, right? However, just like anything else in life, things have changed, and we're playing today's housing market, today's investment market, we're playing by the different rule of the game. So as real estate investor, whether you are a newbie or a savvy investor, you have to adapt to the changes of what's going on in a real estate investment market. All right, so I'm sure you understand. So let me continue. So this 1% rule for decades to quickly gauge your cash flow potential. Why the 1% rule no longer works? Because home prices skyrocketed during the pandemic housing boom. Mortgage rates doubled from historical low back in 2020, 21, around 3% to as high as 8% a couple of years ago, and now back down to the low 6% as we moving toward the end of 2025. So at the same time, wages lag far behind, only 2 to 4% annual growth. The result, rent can't keep up with rising purchase prices and carrying costs. So another problem with the 1% rule is the quote slumlord trap, end quote. What I mean by that? We're talking 1% deals still exist in C to D class neighborhood. However, that comes with a caveat. What is it? High vacancy rates, major maintenance, capital expenditure, and tenant turnover. Paper cash flow wipe out by these types of costs. Very, very stressful type of investing, okay? Because you're gonna, as a landlord, you're gonna deal with the tenants and toilets and evictions and during the night, perhaps. I don't know, not me. So the fixer-upper myth, traditional wisdom for many years, you buy cheap, you renovate, you refinance, and you repeat. In other words, the very, very popular, the BRRRR strategy, the BRRR strategy that's been promoted in the mainstream news media for years. It has continued to be promoted in Instagram, TikTok, social media, mainstream videos, YouTube video, you name it. But the game has changed. I would not go with the traditional methods any longer moving forward if I were you. The reality today is renovation costs are skyrocketing, good contractors are scarce, and distressed property discounts are shrinking. The hidden costs of old homes look good on paper, reality check later, and you may see something very, very different. Common capital expenditure killers. HVAC failure, 5 to 8,000. Roof replacement, 15 to 25 grand. Plumbing surprises, 10 grand plus. Result, returns sink from 8% to closer to 2%. You're investing in a sinking ship. You're investing in a Titanic of real estate investing. You know, because Titanic, you sunk by the iceberg. But if you invest in the right investment model, which I will share with you, if you invest in the right market, I I use the reverse psychology. I use the tip of the iceberg of positive real estate investing instead of sinking ship like a Titanic, which is sunk by the iceberg. Wow, I just thought of this analogy. Wow, interesting. All right, let's continue. This is a typical Midwest markets where all these years you've been misinformed, misdirected, and just that this is get rich quick scheme as promoted by those very popular YouTubers out there, influencers that talks a very good game and does not underpromise. Okay, underdeliver, overpromise and underdeliver those so-called real estate gurus, or I should say, many of the real estate fake gurus out there promoting this type of get rich quick scheme, easy to make money strategy and retire to replace your W-2 income within a couple of years, buying this type of slumlord markets. Okay, some more examples, as you can see. Yep, older property in the Midwest market, 50 to 100 years old. Look, you may get a great deal up front. Don't get me wrong, right? You may get a deal like 20, 30, 40% uh, discount, right? Because you're buying from a stressful seller, perhaps, or you buying with from a motivated seller, or uh, whatever, right? Whatever the case may be, you may, yeah, you may get a good deal at the beginning, right? Of your investing experience, buying this type of BRRRR strategy, BRRR strategy, fixer upper and everything else. But if you if you fast forward for the next few years and beyond, look at the historical numbers associated with older properties in the Class C markets in the Midwest. What you're going to get, especially the higher the unit asset class, the higher the risk and the maintenance vacancies and what have you. So A class, I wouldn't really buy an A class property, maybe A minus, B plus perhaps. That is my investment model, and I will share with you what that entails. But most people, because they mesmerized by the low cost, high cash flow, good on paper returns, they buy in a C class neighborhood, typically 1 to 4 units along as much as a 13% cost. If you buy into a 5 unit commercial or apartment units, multi-units in a C-class neighborhood, expect 15% maintenance, 50% at 13% vacancies, or even worse. Okay? So be careful where you buy. Be careful where you buy. This kind of investment properties are not sustainable. You cannot create generational wealth buying in this type of very stressful rentals. Do you agree? I hope so. All right. So I have a solution for you. Okay, stay tuned. Okay. So where is the real opportunity? Well, Class A new construction homes. I thought you would never ask. Boomtown suburbs around Dallas, Fort Worth, North Texas. Example, boomtown markets in North Texas, in the suburbs, are Sherman, Denison, Bonham, Princeton, Forney, Crandall, Howe, just as a small sample. The typical price, the sweet spot, I call it, the price around 200 to 250K, rents for 1850 to 2000, hitting almost the real 1% mark, a little bit short of 1% mark, zero point 0.8 to 0.9 of 1% mark. That is my metrics moving forward. So we have off-market opportunities with our team in North Texas, one-stop shop umbrella, one-stop shop. We have 17 North Texas boom towns and counting. We're gonna obtaining more boomtowns to promote our off-market amazing properties for our turnkey mom and pop small time real estate investors. Okay, so here are the all the cities. Just oh, by the way, for the rest of my slideshow, uh, I don't have time to go over in details, but you, of course, you have the ability to pause the screenshot so you can uh, digest the numbers on your own. Okay, so here are the boomtowns. Okay, 17. So why North Texas? Well, these metrics, these trends, these data are undisputable. Okay, no other areas in the country come even close to this kind of metrics that we are showing here in North Texas. And by the way, there are 3,000 counties in the U.S. There are 19,000 cities in the U.S. But in North Texas, most of the growth, most of the metrics are right here in North Texas Metroplex. All right, so which is absolutely amazing. I never seen this in all my years of investing, more than 20 years. So why North Texas? Explosive job and population growth, explosive, massive migration, 500 people moving to North Texas every single day, 1,000 people moving to the state of Texas every single day, which is absolutely incredible for the future. Massive corporate relocations, NVIDIA, Microsoft, BlackRock, data center and manufacturing boom in Sherman, Plano, and Frisco, and McKinney. DFW, Silicon Valley of the South, and Wall Street of the South as well. Amazing, amazing metrics, amazing trends and data. Investor strategy today, forget the outdated 1% rule. Throw that out the window. Focus on market fundamentals, population, job growth, long-term appreciation, rent and rent growth. The winning formula is buy where growth is going, not where old rules worked before. So build wealth where growth lives. Dallas Fort Worth Metroplex, the next generation investor playground, and a lot of high tech workers, a lot of high income renters and prospective homeowners are converging into this amazing region. Okay, this amazing metroplex. Future is bright for Silicon Prairie, North Texas, especially Sherman, Texas, with Texas Instruments and several high tech companies doing chip manufacturing. 50 billion in investments and growing in the Sherman and surrounding area. Consequently, as an investor, though buying into this marketplace, you have the chance to continue to receive higher medium rents, which is rising, okay, which is going to give you more cash flow beyond, beyond the current cash flow scenario. Medium income is rising. We have people coming to the area, renting and buying homes. They're making anywhere from $75,000 to $150,000. A lot of them are high tech workers. A lot of them are or financial services jobs, as I mentioned. Okay, and there's a huge housing shortage, right? The builders cannot keep up with the massive population growth. So there's a big housing gap which is continue to grow. And of course, our team on the ground, we have vetted all the neighborhoods, all the locations for our network investors. We have amazing builder incentives from the local, national, and uh, local builders. Amazing incentives, which you can builder rate buy down, 1% seller cost credit, and what first year property management for free, the whole 9 yards, and some more discounts through the fiscal year closeout by some of our builders that we're working with. Now, this number may not be a 1% rule, but in here in this Princeton new builds, but the cash flow based on 25% down payment typically is around, a little bit more than $400. You can't ask for anything more than that, especially in Sherman. Sherman is a city of 40,000 people that are in the next few years, we're getting like 3,000 high-tech workers going to come here to work with a Texas Instrument with the chip manufacturing, and then 13,000 additional support workers. That we're talking like almost 20,000 people in the next few years going to move into Sherman to work in the chip manufacturing in a city only have the capacity to hold 50,000 people right now. Imagine the exponential growth of people coming into Sherman, which will drive up the housing prices for sure. All right. All right. So the pro forma, of course, you can look at it yourself. Another boom town we're promoting, another town, Enos, Texas. Four bedroom, almost 1,700 square foot. Look at this. Look at this price. Almost 1% rule, right? 0.8, 0.9% rent to value ratio. 233K and rents for 2,100, almost $850 per month cash flow. Look, some of this new construction areas with the first year of the property tax is very, very low because it takes more than 1 year for the local tax assessor's office to calculate the true property tax. The first year you get a little bit more cash flow, whereas the subsequent years of ownership, the property tax will revert to the normal tax rate, maybe 1.5 to 2% property tax rate from the purchase price. So it all depends on locations. It doesn't matter. Even in the second year and subsequent year, even if you pay the normal property tax, you still cash flow, right? You still cash flow because income property, there are four ways to make money, not just cash flow, right? Not just increasing rent, increasing cash flow, but you got long-term appreciation, you get tax benefits, you get the the power of leverage, using a 25% down loan, for example, and then your tenant going to pay down your mortgage. That's loan amortization. Each time your mortgage gets paid out by the tenant, you have higher loan to value over time, so you could have more equity from your properties. All right. So some of this property I'm presenting are already you're paying the normal tax rate, but many new construction, the first year tax expenses are very, very low, so it'll give you very high cash flow for the first year. Okay, so that is my disclaimer as I continue with this presentation. All right. Okay, let's quickly, I don't want to spend too much time. You can pause the screen to go over the pro forma, if you like. Another property in Enos, 236K, rents for 2150. This rent right now is just a tip of the iceberg. We predict the rent gonna continue to increase based on the income level of the renters are very, very, very high level. Okay, so very good renters. Okay, so four bedroom, two bath, 1,700 square foot, only 236K in Enos, 2150. Look at the with a low property tax rate in the first year, you can get positive monthly cash flow for the first year. Monthly is around $850, which is absolutely incredible. The numbers are. And few other, okay, let me see what else. Another area in North Texas, Josephine, we have properties there. Once again, only 215K, $1,900 built last year. Yeah, this is a full tax rate, by the way, I think it is. So around $400 monthly net cash flow from 25% down payment. And Maybank, very low price, very good value, only 165K. Where else in the country can you buy new construction in an A-class location for three bedroom, two bath, only 1,084 square foot, and it's only 165K. What an upside potential associated with this property. Rents for 1,450, the full tax rate. You can get a $300 monthly cash flow, which is very, very, very nice. Built in 2023, so the tax rate is correct. This is the proper tax rate, so this is a pure cash flow. And then Maybank, this inventory listing is probably gone. It was listed last week. This is incredible. Five bedroom, three bath, 1,800 square foot, only 221. It rents for like 1,900, maybe even 2,000. But this incredible batch of inventory from this specific builder in Maybank. They gave us several of the listings last week, but it's probably gone by now. Amazing uh, size of the property in a good location, and the purchase price is so low. These are amazing deals. Yeah, these kind of deals, you're not going to see it again. Buyer incentive, fiscal year close out, and the builders are reducing some of the prices. You're not going to see these kind of prices. You're not going to see these kind of deals uh, much longer beyond beyond this presentation. So some of this may be available. 216K, 4 bedroom. Oh, amazing. So I mean, I can track the rent. I use the rent o meter tracking in the within the 2 or 3 mile radius, and the rent is pretty much correct based on the information. Bonham, another city we're promoting, fast growing city in Bottom, North Texas, and 3 bedroom, 2 bath, 1246 square foot. This is a duplex, by the way, new construction duplex, very nice, good location, good quality construction from one of our local builders. 442K only, 3,000 from rent from both doors, 25% down payment, cash flow at around 600 something dollars. So incredible. And let me see that. Let me see. Look at the taxes. Uh, anyway, very good deal. Mr. Well, Farmersville, Texas, 4 bedroom, 1650 square foot, 2 bedroom. Again, almost 0.9% rent to value ratio, 259K, almost two grand rent. Cash flow almost $300 per month at 25% down payment. Denison, 252K, 1800, 0.7 percent rent value ratio, good cash flow. So great numbers. Let me see what else. Let me go quickly. Forney, to the east of the Metroplex, 30-40 miles to the east of the DFW Metroplex, 3 bedroom, 1,230 square foot. Look at this, 225K, $1,900 rent, built in 2021, so the property tax rate is fully implemented here. So you get a true cash flow of a couple of $100 based on 25% down payment. Good fast growing area as well, Forney. And another Josephine, 220K, $1,900 rent, almost $400 cash flow. Let me see what else. This is last but not least, Princeton, Texas, number one fastest growing city in the country according to U.S. Census Bureau 2024 metric. So again, low 200K, 207K. We even have some new construction in Princeton, Texas for less than 200 grand. 181. How about 185K? We have a builder just released the last batch of the inventory before it's all gone. 185K. 3 bedroom, 2 bath, around 1,300 square foot new construction in Princeton, Texas, number one fastest growing city, which is absolutely mind-boggling. But this kind of inventory release will be gone within a week. So here are the rental comps for my software. Anyway, so Princeton, yeah, Princeton, Texas, yes, fastest growing city in the country. Okay, here's the data, and very low supply, fewer homes in Princeton, unrelenting demand equals skyrocketing appreciation in the next few years. Yeah, Princeton, according to a local newspaper write-up a few months ago, stated that it is a rapidly growing North Texas city. Princeton extends freeze on residential development again. So fast-growing Princeton has extended its building moratorium to preventing any residential development in city limits. That means that they have to slow down the construction to to allow for the infrastructure to catch up. It's growing too fast, Princeton, Texas, right? And the prices are entry level prices for investors are so low. This is mind-boggling. It's just absolutely incredible. Anyway, so yeah, finally, you have three options: do nothing, do something on your own, or work with us, because we have vetted the local markets. We have a turnkey provider that are helping our investors. We have professional property management, the whole one-stop shop situation. All right. So anyway, contact me to do a consultation. Live your life on your own terms. Is my contact information, and thanks for watching. And look forward to talking to you to help you build your realistic wealth to achieve your own financial freedom. Have a nice day. See you. Bye bye.